We know in Nigeria there's been a presidential directive for cement manufacturers to cut prices, and we're seeing some of the bigger companies like Dangote already moving in that direction. How's this going to change the complexion of the cement trade in that country?
Is at the producer level, they should let prices decline by around 5% per year. And they've actually already started doing that, but the problem is that at the retail prices, at the retail level, prices didn't come down yet, and you have a big differential between retail and producers, and we expect that producers are gonna have to get into distribution themselves to make sure that the prices are going down. But I don't expect more than 5% per year.
All right, now we do know that there are huge infrastructure demands in Nigeria. There's a huge demand for property, residential property, so cement manufacturers should be okay. Yet, there's a huge deficit when it comes to supply. What are some of the systematic problems there, or the systemic problems rather?
The most important problem is the lack of infrastructure, whether it's roads or power. So this has made it very difficult for manufacturers to operate. And even the existing manufacturers are not operating at full capacity because they can't find enough fuel, or don't have any access to the grid, or have a reliable gas supply. That's the main issue.
So capacity is an issue in Nigeria. What can government do to incentivize more investment so that the manufacturers improve on their infrastructure issues such as energy? They've spoken about tax waivers, for instance, and just try to prompt more investment. Are they doing enough?
They're doing a lot, like they are offering long tax holidays for manufacturers building capacity. They are offering cheap gas to manufacturers building pipelines for cement companies. But still it's not enough, because industrials cannot take all the burden of the lack of infrastructure. It's the government that has to actually sort out the power issue.
All right, it's also a highly protected sector in Nigeria. Is this a good or a bad thing? Because I know the government wants to keep imports to a bare minimum, but unfortunately the imports continue to flood the market.
They are, and the main reason being that there is still a big deficit. So you had this deficit of 7 million tons last year on a market of 16.5 million tons, and this had to be filled by imports. The imports are now taxed at 35%, which makes them pricing at par with local production. But there will still be imports as long as the production locally is not sufficient, and it's going to continue, we think, for some time.
What does all of this mean for the consumer in Nigeria? Obviously, they need cheaper prices so that they can get on with their projects, but in an environment where they also have to rely on imported cement, I don't think the pricing regime has much impact, or does it?
It will actually. What's going to impact very much the retail prices that now that producers are investing in their own distribution, they're going to make sure that the gap between retail and industrial and export prices is going to diminish, because today you have prices at retail level ranging from $210 to $290, while the price at the factory gate is only $180. So distributors are taking far too high margins, and as this is declining, as the producers are more and more getting their own distribution, the retail prices are going to decline.
I mean, you talk about distribution.
Faster than the producer prices.
Okay, you talk about distribution, and I remember being in Kenya and hearing about how some of the major cement makers were making consumers fetch the cement from the warehouse themselves, in that way cutting out some of the distribution costs. Nigeria's got serious transportation issues, which should also impact on distribution. What are some of the more innovative ways of keeping the cost down that the cement makers could think about introducing?
To be honest, there is no innovative way about it, because the infrastructure is so bad that you just have to buy trucks and put a lot of them on the road, because you need days to cover to get to some parts of Nigeria. I don't think that they will be very innovative. I think that they will go from selling the cement ex-factory gate than selling it to the consumer. That's going to take time. If you look at Dangote, they have to buy 5,000 trucks and manage such a large fleet, so it's going to take time. And it's not going to be about innovation, it's going to be about investment in the distribution.
For those wanting to invest in listed cement companies or building material companies in Nigeria, which are the best buys?
We like WAPCO, Lafarge WAPCO. We have a target price on 55 Naira and very conservative assumptions for the new capacity. And we like Ati River Mining. We have a target price of 236 Kenyan shillings. And we see a lot of upside on this share. It's very much a growth stock because now it's pricing at high multiples for next year and next. But they're multiplying their cement output fivefold, so we expect strong growth.
I mean, for many people invested in the Nigerian market, for instance, their preference is for the banks. So for those who need to be incentivized to come into the building material sector, I mean, share price will be one thing, the fundamental of a company will be another thing. But how do they compare their PEs versus those of other sectors?
I guess you would say that construction generally is supposed to be more cyclical, but in Nigeria, with a large deficit, producers locally are not cyclical stocks. I think that, of course, it can't trade as high as some multiples in consumer stocks, which have much more stable COGS, cost, and much more stable top line, because in Nigeria, like for cement producers, you still have some volatility on prices possibly and on the costs if the fuel costs are going higher. So yeah, I would say it's fair to for them to trade at a discount to some consumer stocks, but not as much as